So we're continuing with the accounting of directors' fees, and right now we're going to look at the second part to this transaction, which was the directors' fees owed. You'll remember the first part was the directors' fees paid, where we paid Mr. Gumede 170,000 Rand, and that was 45% of their contracted amount. Now the next part is going to be the directors' fees that we owe. So if we have to look at this quickly on the whiteboard, we can say that this is Mr. Gumede's total contracted amount, and we can say that we've paid him, this would be about halfway, so we've paid him slightly less. We've paid him 45%, which is the 170,000 we've paid to him in cash. So we still owe Mr. Gumede, we still owe him this portion, which is going to be the full contracted amount is going to be 100%. That is, this full amount here is 100%, and we owe him the 55%, which is then 100% minus the 45%. Now the question is, what is this amount? And the way we're going to do that is we're first going to try and find what is 1%. So to find 1%, we need to say 170,000 divided by 45, because these are the figures that we have. Okay, this is the figure that we've been given, and this is the percentage that we have been given. Right, or we can say this is the percentage that we have. All right, so that's the picture at this stage. So if we take this 170,000 and we divide it by 45, we're going to get an answer, which is, if you use your calculator, let's quickly do that. Ooh, there we go. Here's my calculator, and I say 170,000 divided by 45, and that's going to give me 1%. So we can round that off to 3778. Now, if I need to find 55%, I simply have to take this 1% and multiply it by 55. So let's do that. We take this 1%, 3778, and we're going to multiply that by 55. And let's do that on our calculator. We take this same figure, oops, there it is, and we're going to say multiply by 55, and we get a final answer of 207778. Let's go back here. So our final answer is then 207778, and that is the amount that we looked for here, which is 207778. Excellent. Just a quick shortcut for you to be able to do this a little bit quicker. Just a quick recap. We took the 170,000, which represented the 45%. That is what we have. All right. And then we divided the 170,000 by the 45 to get what 1% is. And then we took that answer and we multiplied it by what the figure that we need, which is the 55%. And that gave us our final answer of 207778. Good. Let me quickly show you a shortcut to do this. So if we have a look again at the situation is like this. Here's the total amount owed to Mr. Gumede. There's my 45%, and here is my 55%. This is what's been paid, and this is what we owe Mr. Gumede. This is what we need to calculate. The shortcut is as follows. You take the figure that you have, and then you multiply it by what you need over what you have. Now let me explain this. This part here, you're going to get from the actual figures. This part here, you're going to get from the ratio. Good. So let me quickly put in the actual figures for us here. We've got the 45% is the 170,000. This 55% is what we are trying to calculate. This 45% is what we have. This 55% is what we need. Right, so how do we apply this? We're going to take the actual figures that we have, all right, and that is the 170,000. Then we're going to multiply that from the ratio. Here's my ratio. 45 plus 55 is going to give me 100%. All right, let's do that. All right, and we're going to multiply that by what we need over what we have. So what do we need? We need the owed portion. So let's put what we need at the top. So that is the owed portion, or the unpaid portion rather. Same thing. And we're going to put all of this over what we have. So here's what we have. What we have is the 45%, which is the paid portion. Okay. Now this part here, what did we say? We're going to get that from the ratio. So let's fill that in. We've got 170,000 Rand. All right, and we're going to multiply that with the unpaid portion from the ratio. The unpaid portion is the 55 here. So we're going to say 55, and the paid portion is the 45. So we're going to say multiply by 55 divided by 45, and that is going to give my final answer, which is 207,778. Let's quickly double check that with our calculator. Let's go here and we can clear all of this, and we can say, let me go back to the screen here. We're going to say, take what we have, which is the 170,000, and we're going to multiply by what we need. The 55 is what we need. The 45 is what we have. Remember, these percentages are given. A percentage is always given of something. So these percentages here is 45% of the total directors contracted amount. Right, let's go back. We're going to say, take the 170,000, which is what we have. We're going to multiply that by what we need from the ratio, which is the 55, and we're going to divide that by what we have from the ratio, which is the 45, and that is going to give you the 207,778. So you can do all your percentage type calculations like this. You establish what you have, you establish what you need. This is the ratio that we have, and then you take the actual figure that you have and you multiply by what you need over what you have from the ratio. Good. Now that we've done that, we can complete the accounting for this question, and we need to first identify the two accounts affected here. So we can take off this, and let's quickly do that. Our two accounts affected here is going to be, number one, director's fees, and number two, it's going to be expenses payable. All right, because we have not yet paid this expense, we call it expenses payable because we still owe the money. So in expenses, let's quickly fill in what type of account is director's fees. That's an expense, as we've already established in the previous question. And what type of account is expenses payable? Well, this is money that we owe to outside parties of the entity. So expenses payable is going to be a liability. All right, there we go. Then we need to decide, my expense, did it increase or decrease? Well, my expense, it increased because we owe more director's fees. right? And then finally, my liability, that increase or decrease, it also increased because I now owe more money to the directors. So once we've established that, we can apply debt click, and debt click says debit expenses, assets and drawings or dividends for company, credit liabilities, incomes and capital. All right, so we've got an expense that increases, so that's going to be a debit. And we've got a liability that increases, so that's going to be a credit. Excellent. Right. So now, since we haven't paid anything here, when we go to our accounting cycle, we start off with our journals, which is the diaries of our entries. We're not going to fill this into our cash payments or cash receipts, but rather we're going to use the general journal. For everything else, there is general journal. So every transaction, 2 legs, husband and a wife. So my debit here, we established that as director's fees is going to be my debit. So I go back here, director's fees is my debit, and my credit is expenses payable is going to be my credit. So let's go back, expenses payable, and I can fill the figure in here. We calculated that as 207,778. Right, director's fees is an expense, so let's color it with expense. Expense is payable, is not an expense. Don't be confused by the word expense. Just because it says expense here doesn't mean it's an expense. The word payable or accrued should tell you that we still owe this money, so that is going to be a liability. Good, then we can put this into our ledger account. Our director's fees was debited by the 20778, and the account credited was expenses payable, which is a liability. Credit that with 207,778, and then it's just as simple as filling in the dates. We owe this money at the end of the year. All right, they said the director's fees are owed at the end of the financial year, which is 31 December. So I'm going to put 31 December, 31 December, and my reference will be the general journal and the general journal. And I can do my folio columns on the journal, which will be N9 and B1. There we go. N9, and it's not going to be B1, it's going to be B2. Let's just fix that. B2, which is the expenses payable account. And then lastly, I just put in my contra entries. This one is going to refer to director's fees, and director's fees will refer back to expenses payable. Brilliant. Last thing we need to do quickly is show the effect on the balance sheet. Well, similarly to the transaction that we paid in cash, my expense decreases profit. So profit is included in retained income. So my retained income is going to decrease by a further 207,778. So we can include that. Let's just quickly show you that in the formula bar. So we can say it was the original 170,000, and now we're subtracting another 207,778. There we go. My cash didn't increase by the second director's fees that we owed, but I do owe more money to outside parties, so my liability is increased. It's not a non-current liability. We're probably going to pay them within the next year, so we're going to put that in current liabilities as a 207,778. And there we go. We can see my total assets is minus 170,000, and my total equities and liabilities is minus 170,000. Brilliant.